Hey, good morning, gang. Happy Wednesday. So let's do a little quick update this morning. It's kind of middle of the week. We're kind of working through the week. Let's talk about what happened yesterday, right? We were talking about in the morning yesterday. Be cautious. The market's in an inflection point right now, and you can really see it. You could really see it yesterday, right? What happened was we started out that blood red early in the day, and then after Jerome Powell spoke, things kind of got a little bit more chippy, and things the market moved up, and you ended up with a little bit of a green Dow, a little bit of a green spider. Nasdaq was still down about 0.5%, but it took back about 1.5% on that day. It was interesting, and it just shows you what I'm talking to you guys about, the churn. And that's why, I talked about it yesterday. We're an options trader, but we've only got 3 plays on the board right now, and they're three very calculated, very light plays. Usually we have 6, 7 plays going on at any given time. The reason is this market's in a churn. Let's pop on over to CNBC. I'll share my screen with you here. Oh, we don't need that. And you can kind of see, let's go to the year chart of the spider. You see that mountain right there? That's what we're talking about. And you see every day, right? We go up a little bit, we go down a little bit, we go up a little bit, we go down a little bit. And that's a market trying to find itself. It's trying to find its direction. And that's why, the worst enemy for you as an option trader is sideways market, right? You buy your options based on what you anticipate for a move. If you keep getting this goes a little down, goes a little up, guess what happens? Your options die in their boots, right? They expire. You have to sell them at a big loss or whatever. So right now, it's probably smarter to just keep with like what we're talking about. Take little pokes at some of your favorite stocks and things like that. Make sure you're beefed up, because things could get dicey here going forward. Now, I don't want to be the bringer of doom, but it's looking more and more like things aren't going to go as smoothly as people expected as far as this recovery. This morning we had Lowe's report earnings, and you could see it was a complete opposite, or it was actually almost an identical report to Home Depot yesterday. But there was a big difference. If you look, they warned. They warned going forward. Remember yesterday, Home Depot, 25% same store growth, good top line, good bottom line, but they didn't want to say anything about going in forward in the future. And remember, I told you yesterday, this is why they did that, right? Because this is the truth. Lowe's had 28% store growth over the quarter, but in their guidance, they warned the do-it-yourself trade or trend might be fading. And that's the reason is hopefully we're opening the economy and stuff. Another blip of good news this morning was J&J. J&J got the emergency use for the vaccine. But again, we've had multiple vaccines since the end of the year. We're now rolling into the end. We're that last part of the first quarter, and we're still behind the ball on getting shots in people's arms. Again, just like what I tell you about the economy doesn't need stimulus right now. It needs to reopen so it can create its own stimulus through job growth, income growth, spending. It's all like a domino effect. Same thing with these vaccines. You can have 50 freaking vaccines, but if you're not putting them in people's arms, what's the sense? So like I always tell you guys, that you don't keep your ideologies out of your trading. It's all about what makes sense and what doesn't make sense. Is the market going to go up? Is the market going to go down? But it's interesting. Like you see with those lows, we talked about it yesterday, right? We said there's some reason, and I told you the reason, right? Home Depot just didn't want to admit that if the economy reopens, then people have other options. The DIY trend goes away. A lot of this stuff goes away. People have better places to spend their money than on lumber and nails, right? Do you really want to paint that bedroom when you could be going out to the club? Anyways, guys, but you see what I'm talking about. Home Depot, they were very coy about it, and then Lowe's was honest about it. Again, we need to open the economy. So look, guys, continue trading very cautiously right now. You can see futures just bumping around right now, right? Just bumping, up a little bit. They were up almost 70 points, 60, 70 points earlier. They've really calmed down. But again, today we've got Jerome Powell again, and that might boost the market. It might not boost the market. We'll see how we'll let the market tell us. We're not going to try and guess. We're not going to try and time the market. We're not going to try and guess, just like you guys. We're using moments of weakness to add a little bit to our favorite long stocks, right? Like CCI that I gave you guys the other day. There's a whole bunch of them out there, and we'll talk about them more going forward. Like I said, we'll do a stock of the week every week. But just be cautious. Today we've got Jerome Powell, but tomorrow we've actually got a big schedule of unemployment reports. Of course, or of economic reports. And of course, the biggest ones being the unemployment reports. We've got a housing start report today about half hour after the bell. I don't know how much that'll move things other than the sector. So look, guys, continue to stay very, very cautious, okay? We're just on that, and this inflection point of the markets. And it's easy to get deceived by it, right? It's easy to fall for that, bullish euphoria that's out there right now, right? Yesterday, hey, in the morning, you look at the mood of the market, everybody's kind of scary. And then the Fed chairman comes out and says, don't worry, I'm going to provide this stimulus for you. Don't worry, I'm not going to stop. Don't worry about inflation. I got it under control. These are all scary words, guys, because think about it. What's driving the market up is this stimulus. What's driving up the market is this liquidity created by the Fed. What's not driving the market up, what is not driving the market up is economic growth, right? That can be a scary situation. So look, guys, you have a great Wednesday, okay? We'll probably post some stuff on the page for you lab people today, because we're coming across some really good articles and stuff, and we'll share that. You guys that are trading cryptos, man, Bitcoin popped back over 50,000 overnight. We were talking about that yesterday in our live room with our members, that you didn't want it to stay at that 48, 49 too long, because what it does is technically on the chart, it creates a ceiling at 50,000. So this is actually good news. Of course, boosted up a little bit by like Square. I think Square, Jack Dorsey over at Square bought a bunch of Bitcoin last night, or whenever he bought it. Kathy Wood from ARK, right? This is what I tell you guys about your convictions. If you are sold on a stock, if you like a stock, you buy that stock when it gets weak. That's your opportunity. You buy into weakness, you sell into strength. Well, she showed that, and she showed her conviction yesterday, whether you agree with her or not on tech. And I'll close with a little story after this, but she showed her conviction, right? She went in yesterday. She bought a ton of Tesla. Let's see how Tesla's doing before we let you guys go. I got a funny story to tell you about that. You can see Tesla, it's up about 3% in pre-market. I don't know if that's much of a move for Tesla. But you see the Tesla chart, even it's hitting these ceilings here, and it's kind of doing a churn and stuff too. But here, I wanted to, a lot of people like to talk about 2000, right? The tech wreck. Guys, remember the tech wreck? You guys that were around trading like I was back in the tech wreck, you guys will remember Mary Meeker, and you also probably remember Janus Funds. I forget the kid's name that used to manage the Janus Funds, but let me pull you back on full screen. So if you guys think back, remember Janus Funds? Janus Funds, they were a train wreck afterwards, but this one kid used to run their high tech fund, and he used to, right at the end of 99, it was on his prospectus. He literally just told you this up front, that he didn't care about valuations, and he would pay any price, he would pay any premium for a stock that he thought was a good tech stock. And we know how that turned out. Mary Meeker, right? Ask yourself, is this developing into the same situation like 2000 with your ARKs and your Kathy Woods and stuff, right? I mean, I saw Muhammad El-Arian today, this morning on Fox Business News with Maria Bartiromo. And he said some very good things, he talked. But if you listen to these experts, they all say the same thing that we are. It's not about stimulus anymore. It's not about propping things up. Yes, you need to make sure that a lot of these deadlines get extended a little bit on your unemployment and things like that. But the one thing that will cure everything is just open up. They all agree on it. These are the experts. So you guys, like I said, trade cautious today, trade look for some definition from the market. I don't know if it'll do it today. It looked like it was starting to define itself down yesterday morning. Then of course Jerome Powell came in and gave it a shot of dope, and guess what, it went right back up. Let's see if the dope's wearing off or if the drug dealer, the Fed, has more dope for it. That's basically what's happening. Anyways, guys, see you guys tomorrow morning. All right.